Hello, and welcome back to the channel. I'm Algabot, and here we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today, we're examining a strategy called Pivot Reversal Hedge. It's a pure price action approach, with no moving averages and no oscillators, built instead on classic floor pivot levels and engulfing candle patterns. Over the next few minutes, you'll learn how it maps out the day's key levels, how it spots reversals at those levels, and how its managed hedge mechanism responds when a level gives way. This is educational content only. Let's get into it. So what exactly is Pivot Reversal Hedge? At its heart, this is an intraday strategy built entirely on price action. It uses no indicators at all, no moving averages, no relative strength index, no Bollinger Bands. Instead, it leans on two timeless tools that floor traders have used for decades: pivot levels and engulfing candles. Every calendar day, the strategy recalculates a set of floor pivots from the previous day's high, low, and close. These give it a reference grid for the session, a central pivot point, two resistance levels above it called R1 and R2, and two support levels below it called S1 and S2. Because these levels are derived from yesterday's actual range, they automatically scale to whatever market and time frame you apply them to. Nothing is hard-coded in pips. The strategy is designed for liquid, range-respecting markets, such as major currency pairs like Euro-dollar or Aussie-dollar or gold, on the 15-minute through 1-hour time frames. These are the conditions where price tends to react at pivot levels, sometimes holding them and sometimes breaking through. This approach signals a trade only when it is flat, and it works as a mirror image for both long and short setups. It is a scalping style, meaning it aims for quick, modest take profits measured against the size of the signal candle, rather than holding for long swings. What really sets it apart is the hedge. When a pivot fails and price keeps moving against the original position, the strategy opens an opposite, larger position to work alongside the first. The whole basket is then managed by a money-based take profit and a money-based stop. This makes it most suitable for traders who want to study how reversal entries and recovery logic can be combined in code. Remember, this is for educational purposes only, and trading always involves the risk of loss. Let's walk through the mechanics step by step. The foundation is the pivot calculation. Once per calendar day, when the strategy detects that the date has rolled over, it takes the previous day's high, low, and close and computes the classic floor pivots. The central pivot point is the average of those three prices. Resistance 1 is twice the pivot minus the low, and support 1 is twice the pivot minus the high. Resistance 2 and support 2 extend a full day's range above and below the pivot. These 5 levels become the session's map. Now the entries, and they're a perfect mirror image. For a long, the strategy waits while flat for a bullish engulfing candle whose low has dipped into a support pivot, either S1 or S2, but whose close finished back above that level. In plain terms, price probed below support, buyers rejected it, and a full-body bullish candle swallowed the prior candle. That's a reclaim of support, and the EA signals a buy. The short is the exact opposite. The strategy looks for a bearish engulfing candle whose high pushed up into a resistance pivot, R1 or R2, but whose close finished back below it. Price probed above resistance, sellers rejected it, and a full-body bearish candle engulfed the prior one. That's a reclaim of resistance, and the EA signals a sell. For both, there are filters. The engulfing body must be at least the engulfRatio multiple of the candle it engulfs, by default just over 1. The wick must come within a zone fraction of the pivot, set to 15% of the day's range. And new entries are skipped if the spread is wider than the maximum allowed. Risk control comes next. The base stop loss sits beyond the extreme of the engulfing candle, padded by the stop multiple of that candle's range. The take profit is a scalp target, the reward multiple, defaulting to 1.2 times the candle range, so positions are closed quickly. Then there's the signature hedge. If price travels against the open position by the hedge distance, 1.5 engulfing ranges by default, the strategy concludes the pivot has failed and opens an opposite position, sized larger by the hedge multiplier. Now both directions are held. From that point, the entire basket is governed by money limits. When net floating profit reaches the basket take profit amount, everything closes. If the net floating loss reaches the basket stop amount, everything is flattened. That money stop is the hard ceiling on risk. Here's the heart of the strategy as it appears in Meta Editor. At the top are the inputs you can tune. ZoneFrac controls how close the candle's wick must come to the pivot. EngulfRatio sets how decisively the signal candle must engulf the prior one. RewardR and StopR define the scalp take profit and the stop padding, both measured in multiples of the signal candle's range. HedgeTriggerR and Hedge Multiplier govern the hedge, when it activates, and how large it is. BasketSlMoney and BasketSlMoney are the money-based limits on the whole basket, and there's also a maximum spread filter, the base lot size, and a magic number. Below the inputs, you can see the two engulfing tests. The bull engulf condition requires the current candle to close up, the previous candle to be down, the current body to cover the previous open and close, and the body to exceed the engulf ratio. The bear engulf condition is the exact mirror. Now the long block. When bull engulf is true and the candle reclaimed a support pivot, the code sets the stop just below the candle's low, sets the take profit above the entry by the reward multiple, and calls trade.buy with those levels. The short block mirrors it. When bear engulf is true and the candle reclaimed a resistance pivot, the stop goes just above the candle's high, the take profit sits below the entry, and the code calls trade.sell. Same logic, opposite direction, clean and symmetrical. Let's bring the whole strategy to life on a chart. What you're looking at is a euro-dollar setup with 3 horizontal reference lines drawn from yesterday's range. The red line up top is the resistance pivot, R1 at 1.0900. The gray line in the middle is the central pivot point, and the green line below is the support pivot S1 at 1.0835. These are the levels the strategy watches all session. Watch the opening candles. Price is drifting lower, easing down from the central pivot toward that green support line. Each candle makes a slightly lower low. Sellers are in control for now, but they're walking price straight into a known support level, and that's exactly where this strategy starts paying attention. Now look closely at the fourth candle. The previous candle was a small bearish one, closing near support. Then this fourth candle opens, dips below the green S1 line, wicking just under support, but buyers step in firmly and drive it all the way back up, closing above the open of that prior candle and back above the support pivot. That's a bullish engulfing candle, and it has reclaimed support inside a single bar. This is the exact condition the strategy is built to detect, and it places the buy entry marker right here. The stop loss sits just below the low of that engulfing candle, beneath the support wick, and the take profit target is set a scalp multiple of that candle's range above the entry. From there, follow the next few candles up. Price holds above support, then prints a series of higher highs and higher closes. The momentum that flipped at the pivot carries through, and price advances steadily until it tags the take profit target. The position is closed quickly. That's the scalping nature of this approach, taking the modest, measured move rather than waiting for more. Now the second half of the story, the short side. After the long exits, price keeps climbing, pushing up toward the red resistance pivot, R1 at the top of the chart. The candle just before our signal is a small bullish one, nudging right into resistance. Then comes the bearish engulfing. This candle opens, pokes above the red R1 line, testing resistance, but sellers overwhelm it and push it back down, closing below the open of that prior candle and back beneath the resistance pivot. Resistance has been reclaimed by sellers in a single bar. The strategy marks the sell entry here. The stop loss is placed just above the high of that engulfing candle, above the resistance wick, and the take profit target sits a scalp multiple of the candle's range below the entry. From the sell marker, watch price roll over. The next candle closes lower, then another, each one carving out a fresh low as the rejection from resistance plays out. Price slides down until it reaches the short take profit target, and that position is closed too. So across this single chart, you've seen the complete mirror image, a long taken when a bullish engulfing reclaimed a support pivot, and a short taken when a bearish engulfing reclaimed a resistance pivot. Both use the same logic. Wait for price to test a pivot, require a full body engulfing reversal as confirmation, place the stop beyond the candle's extreme, and aim for a quick reward measured against the signal candle's own range. One thing to keep in mind, not every pivot holds. When a level fails and price keeps running against the entry by the hedge distance, 1.5 engulfing ranges by default, the strategy opens its opposite hedge position, and the whole basket is then managed by the money-based take profit and stop. On this clean illustration, both levels held, but in live conditions losses do happen, which is exactly why that hedge and the basket stop exist. And that brings us to the end of our breakdown of Pivot Reversal Hedge. We covered how it builds a daily map of floor pivots from the previous day's range, how it enters on bullish and bearish engulfing reversals that reclaim those support and resistance levels, how it scalps quick take profits, and how its managed hedge and money-based basket limits respond when a level gives way. Everything here has been for educational purposes only, and nothing in this video is financial advice or a recommendation to trade. If you found this useful, please give it a like, leave a comment with the strategy you'd like us to analyze next, and subscribe so you don't miss future breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.